Welcome back to the CREATiveFund series. Do you want to know how credit works? In this video, we're talking about understanding credit and debt. Stay tuned! Credit means to borrow money with a promise to repay it in the future. There are many types of credit, including credit cards, loans, and borrowing from friends or family. You can borrow money for a home, car, education, retirement, or a business, just to name a few. The amount you borrow is called the principal, and in exchange for the privilege of borrowing, you pay the lender interest. The amount of interest you pay is determined by the lender. For example, a credit card has an annual percentage rate, APR, such as 12% or 19%. If you pay off whatever you charge to your credit card each month, you don't get charged any interest. Otherwise, you'll be responsible to pay a minimum monthly amount towards your balance. Be careful, you can get stuck paying for that pair of jeans for a long time if you just pay the minimum payment. This is because so much of your minimum payment goes towards paying your interest first. Here's a tip. To avoid interest, pay off your balance in full each month. By paying off your balance each month and making your payments on time, you help build your credit profile. Having good credit will help you negotiate lower interest rates in the future when you're ready to buy a car, home, or obtain a small business loan. If you've used credit, you have a credit score. Your credit score is a numerical representation of your credit behavior used by creditors to determine the risk of lending you money. Scores range from 300 to 900. A score of higher than 700 is ideal. You can get a good score by keeping balances low, keeping just a few types of credit open, like loans and credit cards, and paying bills on time and more than just the minimum payment. So, who tracks your payments and your credit history? There are two main companies in Canada, called TransUnion and Equifax, who keep record of all your payments and credit patterns. Request a copy of your credit report and score every year. Did you know that most cell phone companies and your student loans report your payment history to the credit bureau? If you're late on your payments or didn't make your payment in full, this will negatively impact your credit score. Now, what about debt? You may have too much debt if you are using one form of credit to pay for another, pay the minimum balance only, or are declined for credit. So, what can you do to reduce or avoid debt? Start by making a plan. Use this calculator to see how you can pay for your debts. Earn more money by working a part-time job. Start cutting back and live within your means. To prevent future debt, build an emergency fund. For student loans, visit canlearn.ca and use the repayment calculator. You'll be able to estimate what your monthly payment amount will be so you can plan for it. Be sure to check your National Student Loans Service account each year you're in school too, because you may be automatically considered for provincial grants that may reduce the principal of your loans. That's it! Use credit wisely, avoid or reduce debt, and stay tuned for more financial tips and tools from CREATiveFunds. You can subscribe to this series on YouTube and follow Financial Aid and Awards on Twitter and Instagram. You can also email us at financiala@ocadu.ca.